I'm going to do my best to go macro on a longer video here to show you and describe you what I'm seeing as far as what's in the world and how it relates to your ability to go attract capital for your business now and in the future, or as a real estate investor to go restructure, acquire assets. So bear with me. It's going to be like no particular order other than like just off the headlines what I'm seeing right now. So first off, you're going to see, like last night, Bloomberg, Asia about dollar debasement. Now we're not panicking yet, but if you look at gold, silver, other commodities, there's a race to those assets because they're secure, they're solid, especially gold. There's no third party, valuation there. It's or counterparty risk. It is. And silver is in much need for the AI and infrastructure for our technology. So that's gone from $25 an ounce or so last year to over $100 an ounce and climbing. So that is both a play based off the devaluation of our dollar as well as a need for that precious metal. Now, there's also the yen, which the yen carry trade was a big deal. They would they were a big buyer and kind of still are a big buyer of our long-term notes, 5-10 year treasury notes, and they're trying to repatriate that money. So their long-term debt is much higher, 3 times higher, 4 times higher. Went from close to 1% now, we're at 3-4%. So the attractiveness of the United States dollar from that standpoint is gone. I mean, they're going to buy their own. So there's less capital in that place, which leads to there's a couple more times when the Federal Reserve had to buy back their own notes. As these things roll over and new notes are issued at a higher rate, there's no one bidding on these things. So your bid to covers are, high. So that's going to indicate a higher long-term rate environment, even if the Federal Reserve lowers the short-term rates. So keep that in mind right there. So pin that a little bit. So you got, your commodities are going up, which is is your first flag that something's happening as far as inflation wise. Federal Reserve the Fed is not going to be lowering rates, which means inflation's still sticky and high, even though unemployment is higher than they want to admit. I'm seeing, I see the news today, last couple of days. So UPS just laid off 60,000. Amazon just laid off 16,000. That's massive. That's, what's that, 46, almost 50,000 people right there is laid off coming months. It doesn't include the others like Ford, FedEx has laid off some people. It's, there's going to be more layoffs. And they're saying this because of AI, but it's, they're just not filling those roles because everything's shrinking down. People don't have liquidity. Okay, so put a pin in that. Now let's talk about, what happens in Venezuela and Greenland. Now, if you think it is all about narco-terrorism and Venezuela, it's not. And Greenland is, flat out just a military strategic point. We're trying to cut off China and Russia because they're smelling blood in the water from our what's happening with our dollar ability and our currencies, as well as geographically and geopolitically. Those are two strategic locations, Venezuela and the Caribbean, and then Greenland up in close to the North Pole as far as trade. But each country has large assets. And this is what I want you to take home here is we're not trying to acquire those. We're trying to gain control of those for basically first rights to have those assets, because the United States needs those assets to help stabilize the economy, show strength, be able to keep our interest rates low. So it keeps on, the plumbing keeps on happening because the assets need to rise. In the income needs to rise as well, because people are just not, they need more disposable income to be able to generate the economy. Now, the way it's happening right now, Trump's not going to go say like, hey, we got to go. We're our dollar and our currency is, going down, even though he kind of said he did. He wants a weak dollar to go attract more of it coming in for trade, but he's not going to say that we need it or we're going down. It's like he thinks it's just a good idea and to go show strength, but we need this country needs, and the people need more disposable income to be able to carry their debts, be able to pay for groceries, be able to take the trips, be able to make their car payments, and all that. So all that to say, here's my 2 cents on what's happening and what you need to be doing as a business owner investor. Hedging, and this is, I'm not a investment person. I am just self-taught, watching everything. Do as the institutionals do. So what are they doing? They're buying gold, silver, copper, precious metals, commodities. Individuals, be able to hold that as a storehouse of wealth is a really good idea, because you can hold that in your house without a whole lot of issues. You're not going to hold a bunch of corn, but you need to have those things to be able to hedge against the dollar deflating. And this, I saw an article I posted on Facebook that the 40% decline in the purchasing power of the U.S. dollar in 2026. I'll go find that, link that in the video here. But and I was like, I think I posted that back in maybe like late October, early November. I can't remember when it was, but it caught my attention. All of a sudden, this stuff with the gold and silver started happening. So buy assets, stocks. Now, what stocks you need to buy? Again, I'm not an investment advisor, not licensed, anything like that. But I'm telling you, like the stocks that are going to be, probably on the upswing is, I don't think AI is a little bit of a bubble right now, but some mining companies, and then you've got defense. I think those are going to be two of the winners. Again, you talk about the 2026, you go to the conspiracy theories about midterm elections and wars and whatnot. But, I think defense plays is a pretty good idea. And as your business owner, you get back to your access to capital. If most businesses are zombie businesses right now, I mean, I'm a commercial lender. I see these things all the time. Most businesses are barely making it meet, and they need to borrow money cheaper to be able to keep up with their payments and be able to keep the business afloat, because their payments are killing them. Their business is okay, but there's been a decline in customers. There's been an increase in cost of goods. You can't necessarily pass along all the markups there. And then if your debt goes up, that squeezes all your profits. So now you're at 1-to-1 ratio, 1-to-1.1 ratio as far as your debt servicing. So you're very tight. So if you're a business right now, being able to remain profitable, there may be some opportunity to go restructure some of that debt, but you've got to retire some of it somehow, some way. Be able to scrape through. That's usually through sales. It's usually through, or even acquisitions of competitions to go streamline and keep your cost basis down. But those that do not have profitable businesses or zombie businesses are going to be left in the dust. I mean, I use this example in the longer video, or the short video about Forrest Gump. Remember when he went out with Captain Dan, or Major Dan, in the shrimp boat in the middle of the hurricane and got hit? Well, they survived because the best place to go is offshore, and they came back and all their competition was wiped out. So if you had the ability in your business to be able to be profitable, have an incredible team, keep your debt low, you're going to be able to access a bunch of capital, because there's going to be a bunch of capital sitting on the sidelines looking in. And then if you look at right now, even like Europeans, even institutional investors, their cash is very, very low. It's not that they don't need reserves. It's they're sensing that, like, if they keep on the sidelines, they're going to lose more to inflation than they want to, which, normally you're going to lose like 3 or 4%, but it's extremely high. So they're not putting into stocks, they're putting into precious metals, putting into businesses, short-term debt, to be able to make their margins so that the dollar does not die. So that is a long form video. I'm almost 10 minutes long here about doing that. So to sum it up, as far as like what's happening, your purchasing power of your dollar is declining. It's going to decline more. It's not the end of the world for the U.S. dollar, but all fiat currencies go to zero at some point. Being able to hedge against this is extremely important right now. So any cash that you have on the sidelines, either retiring debt or buying assets, and keeping your books up, being a profitable business, attracting the right team, keeping your house in order financially will benefit